Happy to be hosting today's webinar. Thanks you all for taking the time to join us during this presentation. I hope you can see my screen properly. Before we dive into the project details, let me give you a quick overview of LandQuire for those discovering us for the first time, especially. So after spending over 10 years in the US real estate industry and completing more than 400 fix and flip projects on single family homes, I reached a point where I was tired of the stress dealing with tenants, chasing rent payments, and wondering whether my properties would be left in good condition. That's why I co-founded LandQuire. It's simply a better way to invest, no tenants to manage, no repairs to worry about. So we have created a model that eliminates those headaches and delivers predictable results by driving appreciations ourselves without the stress. So basically, LandQuire is a US-based company founded 4 years ago. We are now entering our 5th year. So our core activity is quite simple, but powerful. We buy, improve, optimize, and resell land with high value add potential across the US. But we don't just buy any land. You know, we focus only on high growth markets where land value is expected to rise and where demand for housing or development is structurally strong. So thanks to our data and proprietary technology, we analyze tens of thousands of lands-related data points to spot the best off-market opportunities, meaning we negotiate directly with landowners below market value. And then our role is to add value and force the appreciation through entitlement and planning, such as zoning, permitting, and access to utilities, for example. So we prepare lands to be sold to builders or developers. They often come with purchase intentions already lined up. So it's very important to note that we do not build. We just sell the projects without the constructions. So some of the key milestones now to date, we have analyzed over 1.5 million parcels, raised over 35 million, and launched more than 30 projects. And we have worked with over 600 investors. We have offered more than 130 investment offering. So our operations are primarily focused in Florida and Texas, two states that combine a very strong population growth with dynamic economies. So basically our criteria, so we target land parcels between 50 and 500 acres. This size strikes the best balance. It's big enough to add a serious value, but still manageable from a permitting and infrastructure standpoint. So we also make sure the land has easy access to the roads, favorable topography, and high demand from builders. In many cases, we already have expressions of interest or letter of intent from developers before before the permitting process is even complete. So we are meeting basically a national need. Our strategy directly responds to a structural housing shortage in the US. So for over a decade now or more, the supply of housing has lagged behind demand, and the gap is growing. By preparing land for development, we play a real role in addressing this nationwide issue. We have already successfully delivered several projects, as you can see, and at the end of the presentation, of course, you will receive our full project brochure and access to our data room, which includes all the technical and financial documents you may need to make an informed decision. So the LandQuire model is designed to generate a strong short cycle returns by focusing only on land value creation or site optimization and value adding improvements without the construction again. So we acquire raw lands basically and exit once the land is legally subdivided, fully permitted, and connected to infrastructure. We are working closely with LGA. It's a specialist firm. Let me show you here in civil engineering and urban planning, which ensures regulatory, technical, and planning compliance across most of our projects. So you can see they have more than 21 years of experience and over 1,000 employees. I will continue with my presentation here. At every stage, we integrate environmental, social, and governance principles into our planning, which basically means that we intend to protect, the wood areas. We tend to be responsible, have a responsible use of natural resources, and sustainable water management. Now let's jump right into today's featured opportunity, the Portfolio 15. This is our 7th project in Texas, a state where we know and have a deep experience in permitting, urban planning, and resale. It's located in the city called Marion. It's just 30 minutes from San Antonio, which is, by the way, the America's 7th largest city. Marion is one of the last affordable and land pockets in a region seeing explosive growth. So the project spans 32 hectares in, if I want to convert, or 80 acres, and it's designed for mixed-use development, which are basically high-quality mobile home residence and upscale RV, which is recreational vehicle parks, or RV parks. So this is a niche, an alternative and affordable living niche that has been growing at over 10% per year over the past 4 years, especially during post-COVID. So we are planning to develop 501 units alongside amenities like green space, clubhouse, a pool, for example, and sport facilities. The raise is capped at around $2 million with a minimum investment of $100,000. So we are only opening this offering to 20 investors maximum. For comparison, our recent raises have averaged $4 million per portfolio, and we consistently attract over $2 million in investor capital every month. So we expect to fund this opportunity pretty quickly. Also, half of this raise is pretty much already committed. So we expect to close this offering, to close the round by the end of the month, which is within the next two weeks for now. Your investment generates returns on basically two levels. First, your capital earns a secured 10% preferred return annually, regardless of the final resale price of the project. And you get paid first. And then after that, a share of the final profits upon resale, when the project sells, also depending of the amount invested. So later in the presentation, we will break down together the financial model, and we will highlight how it directly benefits you. So for example, if you invest $100,000, you are projected to earn 63% over 2 years, or which means 31.5% per year, or 67% over 3 years if the project sells within 3 years, which means 22% per year over 3 years. So compared to a standard, let's say 3% annual life insurance policy, you are looking at a minimum of 10x the return investing with us, and also backed by preferred shares and a low risk asset-backed structure. So for our investor, it's a pretty safe investment. Now the location, let's take a look if I can show you my screen as a Google map. We can see that our site is here. And here's a satellite view of the site. You can see it's strategically located in the Texas Triangle, between San Antonio, which is here, really next to our project, and then you have Austin right here, and Houston, which is right here. It's very important to make sure when you invest in a project, the location is a pretty solid location with a very high demand. You also see several major home builders and developers in the area already active, in the area, which validates our market position. So just a step away, for example, from our site, there is a company called Texas Built Homes. They have a website, and you can see what is selling and who is buying in this market. We've got another example here of a company called Converse Meadows, which is also next to our project. It speaks volumes about the demand and growth potential in this area. So basically, these are the kind of developer and builders who will be our buyers when we exit. So it's pretty clear that we are entering a booming sector with strong appetite, and we are positioning ourselves to capture a significant share of this large and expanding market. Here, for example, there is a local brokerage that has specialized in the same asset class for years, and they have sold projects like ours. I will show you later how they calculated basically their resale values later during this presentation. Moving on to the next slide. Okay, so we are now seeing the site plan, which is also available in our data room, by the way. So it shows basically the layout of 501 units, the shared facilities, infrastructure plans. So we have also uploaded here in our data room that you will have access to the entire permitting and urban planning roadmap. I would like to introduce you to our Vice President of Acquisition, William Van Biesen. Basically, William is in charge of finding new land opportunities and negotiating directly with landowners to get properties under contract. William is also leads the due diligence, checking things like road access, for example, flood zones, utilities, and zoning. And he also manages the entitlement process, coordinating with the engineers, LGA, and local authorities to get our plans approved and officially recorded. Hey, William, if you can hear me, could you walk us through the permitting process and explain the infrastructure and utilities connection? I will share my screen here. You can see the conceptual plan as well while William is speaking. William?
Thank you for the introduction, Thibaut. I hope everyone can hear me. Good afternoon, everyone. Thanks for your time today. Looking at the site plan that we had LGA Engineering put together, we've decided to go with a mixed-use park. The light green and an angle pads on the southeast side of the property are going to be designated for RVs with smaller pad sizes. And as you can see, we have yellow, light blue, and purple for the mobile home pads that we're looking to create on this project. We decided to do a mix of pads for double and single wides. We're in a competitive market. Looking at what people can afford in this market, we want to give them the opportunity to also um, go a more affordable route, and therefore they would opt for a single wide over the cost on a monthly basis for a double wide. As we are currently going through our due diligence, Thibaut, if you wouldn't mind pulling up the
Sure.
water map. We currently have access to public water right in front of the site. It's a 12-inch PVC water line that's running in front of the property. We are currently we've submitted for a utility service agreement to confirm that we have enough capacity on the already existing water lines that are in front of the property. As what Thibaut is showing is the already existing lines that are in place, as well as the uh, future plans for additional water lines to upgrade the system in the future. For our particular project, any future upgrades aren't going to be required. We expect that with the existing lines, we have enough capacity for the 501, 502 pads that we're looking to end up with. But that will be one of the important items for due diligence. On top of that, we've closed on the property, we'll start working on the entitlement of this project. We're expecting this total to take about 320 days in total. The first steps are going to be getting a boundary, a topographic, as well as a tree survey. All three will be crucial to have in our hand when we are finalizing the preliminary site plan that we've just shown you. Maybe depending on how the property will drain, detention pond sizes, we might have to move around the plan a little bit, with maybe shifting the amenity area from the front to a different location. Um, that will all be dependent on the topographics we have on site. Obviously, we want to know the exact boundaries and the cost of cutting down the larger trees. We're trying to see if we can overcome that by working our way around the larger trees, which we'll be showing on the tree survey. Towards the end of next month, we're then going to be focusing on our plans to submit with the city and county on. It's probably going to take us about 2 to 3 months before we can put all of our plans together from a technical standpoint to be submitted for our construction plans. We'll be going through 2 rounds of review. The first one we'll be focusing on the site plans that we'll be submitting. We'll be doing a traffic impact analysis to make sure that the current infrastructure has enough capacity for our project. On top of that, if there's any upgrades needed, like a right or a left turn lane, that we would have to take that into account as we're going through the entitlement, and include that into our construction cost for the project down the line once it's fully entitled. Other items are stormwater management to make sure that our detention ponds, we've done the calculations on those to make sure that we have enough capacity for stormwater retention, as well as I was mentioning earlier, a potential tree mitigation plan that might be needed depending on the survey that would come back. Once we have gone through the first round of review, as we're going through the review, each department of the city and county will be giving us feedback as we go. And then we'll make revisions as we're going through that review period, so that once we've gone through it, we can get ready for the second and final round of submittal, which will include the general planning, the submittal for traffic, as well as consult with our septic engineer for septic fields, the acreage that's going to be required. The calculations will be done for that, for our leach field, as well as the system itself. And then we'll be working towards the permits that are going to be needed, including a driveway permit, which is then going to bring us to pretty close to the finish line, where we're going to be submitting the final plat, and which will also be recording, which will be in about 320 days from now for this particular project.
Great. Thank you so much, Will. Very detailed oriented. I really appreciate it. I think this will help a lot of investors to know, exactly what's going on. And we are so proud to share in full transparency what we are doing. Thank you so much, Will. So why Texas? So as you probably know, Texas is currently, or if not, the most dynamic US states, both economically and demographically. So if I can illustrate that with a few articles online that you can see. Right now, we are seeing a massive capital flows across various industries. For example, 500 billions into artificial intelligence, hundreds of millions as well into the film industry, for example, as well as automobile industry, car industry, energy industry. You see plenty of articles online. So which basically signals a really strong investor confidence in long-term and high growth opportunities. So in Texas in particular, where we are experiencing a very high and explosive population growth. Here, for example, you can see Texas is projected to keep growing and expected to reach 47.3 millions by 2050. And some projection actually suggest Texas could become the most populous US states by 2045. And if you check these recent articles here, for example, you will see the Census Bureau just named the fastest growing cities in Texas for 2024, for example, which confirms that this trend is already well underway. You see San Antonio was second with almost 24,000. San Antonio is 30 minutes from our site in Marion. So all of this creates a massive and growing demand for housing, for land and infrastructure, and that's exactly where we come in. What does that mean for us? A strong, an upward pressure on real estate prices, which reinforce and solidifies the resale value of our project. And why Marion? Well, Marion has a very low vacancy rate at 7%. If you want to compare nationwide, statewide in Texas, the low vacancy rate in Texas is at 9%. We also see a consistent population growth and a higher standard of living than nearby cities like Emmeldorf or New Braunfels. So those locations we used to work with on those locations, and I can tell you in Marion, Marion has an overall higher resale price. Pretty much 50-70,000 more than cities around. So this is very important to know. And then we can take a look at, basically your favorites, our project financials or pro forma. Total acquisition costs, you can see here at close to 2 million. Which basically include, and thanks to a strategic negotiation from Willem, we only have to pay 500,000 upfront, and the balance is actually only due after a long period of time. This is here the seller note. So we basically negotiated with the seller. Willem, you led the negotiation with the seller. Congratulations, first of all. And also, pretty quickly, can you tell us how did you approach and manage that process with the seller to negotiate such an amazing deal?
Sure, Thibaut. So the negotiations, we initially started off with the deal was brought to us from someone within our network, who knew our exact buying criteria, and it was initially brought to us with an asking price of the seller of $4 million, with a full cash offer. Doing running the numbers on our end, putting the pro forma together, reviewing the cost that's going to go into, holding the property for property insurance, property taxes, as well as all the engineering work that's going to go into the project, with all the fees for our land planner, the fees that we're going to have to pay to the city and county for their review periods, the project management of the entitlement, and on top of that, we always like to put in a contingency where if we have any unexpected cost, that we can cover those and we're not running into an issue with our budget. I ran the numbers on our pro forma, and looking at on the back end value, we want to make sure that we can offer a competitive return on this investment opportunity. So I've gone back and started renegotiating on the price. We've done a few deals before in the San Antonio market that we've been able to acquire with a seller financing component to the price. In this scenario on our end, we didn't have the room to go up and to the 4 million. The seller was firm on that they weren't going to let this go for 3.25 or anything less. So on the deal, the numbers worked out great for a acquisition price of 500,000 with 2.75 on the 36-month note, and as we're simultaneously not paying any interest on top of the balloon payment that's going to come up after the 36 months. And then on the disposition end, we have the expenses for brokerage, the closing costs, our disposition cost, and which is bringing the net revenues from roughly 7 million down to 4 million once all of the costs are reduced.
Okay, great. Yeah, I mean, it's a pretty amazing. I love how we can be creative sometimes in real estate, which allow us to, for example, this approach allowed us to reduce our capital needs, and it also allow us to finally to start the entitlement process pretty quickly, and also it allows us to boost significantly the return on investment for our investors, for LandQuire. So it's great and smart leverage. So thank you for that, Will. And on the acquisition side, pretty standard. We have included the following costs, such as closing fees, taxes, insurance, legal, and also all the urban planning, the permits, the surveys. We have built in a 10% margin of error for contingency for extra safety. And on resale, we have used conservative market assumptions based on our conversations with our brokers, realtors on the ground, which they say that basically the project resale price per lot will be around 22,000. So that's why we put a very conservative number at 17,000 across the 501 units. You can see unit prices vary, depending on the size and the model. But we ultimately reach an average net sale price of just 13,027 per lot, which is very low compared to the recent sales of similar lots in the area. This will also allow us to be the first of receiving offers from the builders and constructions. I can tell you that. So from a builder or developer perspectives, which is basically our future buyer, the estimated rental income per pad or per lot is $600 per month. To support this, we can look at a few nearby comparables. If we look here, you can see that this mobile home company, one builder here, this builder rents his mobile home for $660 per month. We have another developer in the area. You can see here. So the rents are anywhere between 620 and 640, and these aren't even new construction. So as you can see, our 600 estimate is very conservative, which leaves plenty of upside for our buyer. And let me tell you why it's also attractive for developer. Let's say the builder acquire a lot for 17,000 or 13,000, which if we can take the average, 13,000 is investing on top 25,000 in improvement, which brings the total cost to, let's say, 36,000, 40,000 maximum per unit. With a rental income at $600 per month, you can see for yourself the investment has a huge cash flow upside and benefits, and also on top of that, based on, let's say, 20 years Texas trend, the asset class benefits from an average annual appreciation of around 10% per year. And many builders will prefer to hold onto the assets long term to capitalize on both steady cash flow and also long-term appreciation. And also, if the builder decides to sell the project after construction, so from a resale perspective, it's interesting to see in this area for this type of project actually, if you take a look here, are selling at with a 5-10% cap rate to their buyers. So it's a decent yield in today's environment. And for example, we look at our portfolio. if you look at the gross revenue, annual revenue, at around 2 million, year first, year two, year three, it's much more, but let's say year first at 2 million in gross annual revenue, it justify basically a resale valuation of approximately 40 million at a 5 or 6% cap rate. So this provides a clear and very lucrative path to scale and basically exit for developers and promoters alike. So let's say the promoter, is all in for 18, 20 millions, in our project, including construction costs, of course. With a potential resale at around 40 millions, that's a chance to double the investment for the promoter, which, I can tell you, I think you agree with me, it's a very highly compelling ROI, return on investment, by any standards. So the ROI speaks for itself, right? Now let's take a look at basically how you get paid as an investor. So as said previously, you earn a secured 10% preferred annual return. And on top of this annual return, you will receive a share in the profit. 55% of the net upside goes to the investor. For example, if you invest $100,000 and if the project sells within 2 years time frame, you will earn 20,000 over 2 years secured, plus 43,000 in profit share. So if you do the math, you get $63,000 out of your $100,000 investment. So 63% in 2 years, or 21.5% per year. So now, if the project sells within 3 years time frame, you will then earn 67% ROI, or 22% per year during 3 years. LandQuire only get paid last, so after all investor returns. And the more you invest, the greater your share of the profits. For example, if you invest between 100 and 249,000, as I said, you receive 55% of the profit. If you invest between 250 and 499,000, your share increases to 60%. From 500,000 to 999,000, then your share, you get 55%. And at 1 million and above, you benefit from 70% profit split. To put that into perspective, if you invest 1 million, your projected return will reach about 75% in just 2 years, or even 78% if it's over 3 years. That's a considerable return on investments by any standards. Let's talk about how the equity is distributed. It's pretty straightforward. So once we sell the project, the funds are distributed in this order. First, any remaining payments, of course, all to the sellers are made. Then the capital goes to our investors, which are our limited partners, until they are fully repaid. After that, the 10% preferred annual return is paid to the investors. And then after that, only once those steps are completed, do we distribute the profit split. Investor receives their shares, and LandQuire, as a general partner, gets paid last. So it's a standard, a very investor first distribution model, I would say, which provides clear alignment and security for those who trust us with their capital. As you can see, homes here in Marion are currently selling between 320,000 and 375,000, and prices continue to rise steadily year over year. Each listing includes a link So feel free to click here through if you'd like to view photos or get more details on the properties. Let's talk about post investment support. You know, you are fully supported after your investment because your satisfaction is our priority. Our goal isn't, you know, just to offer you a high performing project in a proven growing market, but it's also to ensure you feel confident, well guided, and surrounded by professionals every step of the way. So that's how we earn your trust, your referrals, and hopefully your reinvestment. So we offer a dedicated investor portal with all your legal investment and financial documents, a monthly email updates with the company-wide KPIs. We offer you a quarterly project-specific reports, a real-time project tracking and milestone. For example, here you will have access to, I will show you here, you have access to a live dashboard where you can see, for example, all of the steps that have been completed, when they were completed, you know, you see the dates here, and what's coming next. So, and the deadlines for each stage. It's updated weekly, so you can easily track the progress in real time. You can see here, for example, the overall progress, and it's pretty advantageous to our investor. In full transparency, we share all of the details. We also have a optional access to a US tax advisor. If you are based in the US, you likely already work with a CPA. A CPA is a certified public accountant, but we are happy to recommend one if needed. For international investors outside the US, we strongly advise working with a US based CPA, familiar with cross-border investments. We can refer you to trusted professionals we worked with. We also typically recommend investing through an LLC, limited liability company, which provides tax advantages and which will allow you to open a US bank account and helps you diversify your portfolio by investing pretty much in the world's most stable and resilient economy. And when the project sells, you can decide either to reinvest or to withdraw your fund. Since most of our investors choose to reinvest with us, we are very proud, you know, to build long-term partnership based on trust and strong results. We also enjoy collaborating with our investors by giving them an opportunity to refer new investors to LandQuire. In return, they can earn, or you can earn, a referral commission. So if you're interested in this program, feel free to speak with your LandQuire consultant for more details. As you can imagine, and as you know, our goal is to keep building long-term trust through transparency and communication. I want to show you before we wrap up this webinar, the data room. You will receive the link to our general data room, which includes a detailed Q&A here with over 38 questions. You can see in English here, with all of the questions from our investors. So if you're interested in joining LandQuire and investing with us, I highly recommend that you take a look at those documents which will bring you a lot of clarity. We also, provide you with all of the legal and structural documentation. We also provide you with a monthly shareholder reports. For example, here you can see the one we have done in April. You see the good, the bad, the next steps. So with each department. So this is very transparent, guys. I don't think you will see many companies in the world that provide such transparency in our company across all the departments. You will receive also entity organizational charts, a US tax treatment documents. You can see here a presentation of the, in the accounting and tax returns standpoints. How do we create an LLC? How much does it cost? And the services, which includes all of those legal and accounting and tax returns. So this is very important that you access to those information. And soon we will also add our quarterly corporate service reports as well, which I'm pretty excited about. I think we have done our first one actually here. We just added, I think yesterday or like a few days ago. You will see a breakdown of, well, it's in French and then in English, but you will see pretty much all of the information that you need, which I'm sure you will feel secured investing with us based on what we have done and our track record. You will also find, by the way, guys, a track record, including past exits and investor returns. So all of the sold projects here, you will see all the numbers, our ongoing resale projects that are currently on the market, ready to be sold, and also our currently open investment opportunities. Feel free to also look at our website. We have redesigned our new website recently, so we are pretty proud to announce it to our investors. Of course, any comments or any feedbacks will be appreciated so we can improve it over time. You can see our track record here. If you look, if you get it here, sold. By the way, it's in Spanish and French as well. You have our Q&A as well, our team. So this is our track record. Feel free to go over it, and feel free to get to know us, get to know the team behind it. And you also are able to add us on LinkedIn. Romain, for example, is doing one video per day on his LinkedIn profile and Instagram profile. I'm also doing one video per day on my social media. Feel free to connect with Alexander Thévenet, which is our Vice President of Investor Relations, our Director of Finance, Edouard Brun, Willem, you already know him. So yeah, this is the team behind it is very, very, very important. So I'm very thankful and thank you guys for being here today. We look forward to having you joining us in this exciting project. You don't want to miss out. I promise you. You will be glad you did. You did take the first step and invest with us. Have a wonderful rest of your day, guys, and I'm excited to work with you. Thank you.